Welcome to Power Charting. I'm Bruce Frazier. I'm your host, and today we are going to talk about redistribution. And again, we are doing these workshops not necessarily because this is a point in time in the markets when this technique or methodology is going to be profoundly useful, even though in some cases it could be. But we want to build up our Wyckoff market knowledge and develop a library of capabilities. And so we've done Wyckoff workshop accumulation, Wyckoff workshop distribution, and now we're doing redistribution. We've done a reaccumulation, and we're by no means going to cover the whole topic in the time that we have together. It's going to take time, and we're just going to keep adding to the body of knowledge week after week after week. And so today we're going to really introduce this redistribution concept, and I'm going to show you where you can go to get additional information, do additional reading on this subject. And so to start, let's have an announcement and great news. Roman Bogomazov and I have a weekly Wyckoff market discussion on Wednesday at 3 p.m. Pacific time, and we are going to have a free version of this Wyckoff market discussion available to all, and you are invited. Love to have you come attend. We spend 90 minutes covering all aspects of the markets. We look at indexes, we look at individual stocks, we look at different commodities and industry groups, etc. And we think that you're really going to enjoy the time that you spend with us in our Wyckoff community. So the easiest way to sign up for this is go to my most recent blog, and at the bottom there will be a link that you can go into and very simply sign up right on that page, and you will receive an invitation, and we will be very happy to see you there. Also, the TSA SF Not-for-Profit Technical Analysis Society is going to have for their April event the very capable, excellent Elliott Wave teacher, Jeffrey Kennedy. And in my mind, he is the best Elliott Wave teacher that there is out there. Wonderful person. He is going to give the TSAA a wonderful webinar on April 18th at 5 p.m. Pacific time. You need to be a member to attend, but everybody should be a member of the TSAA SF because it's just a wonderful society. We have great events every month, and we have special events through the year, and we really want you to be part of this exceptional organization. Okay, so we are going to start our discussion today with the Hank Pruden investor adoption diffusion model, and mainly the point that I would want to make with this particular model here, the cyclical model, is that once you complete distribution at the top of the range, and this range can be measured on intraday basis. It can be daily, weekly, monthly. These cycles occur in all time frames, but typically here we're talking about the classic business cycle or the intermediate cycle. That once you get into markdown, you don't go straight down in most cases, but you have pauses along the way. And I know you appreciate my artistic license here. And these pauses are what we describe as redistribution. And so you have a primary distribution at the top, and then redistributions on the way down. And these redistributions are very important to understand. And for those that want to trade redistributions in the form of taking short sales, this is a very important skill set to have. Redistributions are tricky. They're difficult. I don't necessarily recommend short selling, but it is great to know how to function in all aspects of the market cycle. And so let's have this discussion and put this video into our body of knowledge on Wyckoff trading. And so we're going to start here by having a look at the Nasdaq Composite. And in this particular case, this is from a blog that was written on December 29th. And it actually was from an initial blog that was written on October 27th. And you can see here that there was distribution. And this distribution area, you can see, is measurable on a point and figure chart in two parts or two segments. And this gold line here represents the smaller of the two. And this is important because part of our discussion today is really going to be about how to use point and figure in the redistribution process. And so here you can see that this initial count goes down to 7350, 7125 from the area peak of 8100. So a pretty stiff decline, but that it's not a cyclic decline, but it's a swing trading decline. Then you can see that, in fact, this decline does occur, and it gives us, goes into the area of our count objective and hits the lower range almost, well, really perfectly. And so you can see here that it then goes into a redistribution, and we will show you an additional chart with more data here in a minute. But also notice that after the initial decline to the higher range area of 7350, it bounces. And at that bounce, we take an additional larger count, which goes down to 6,800, 6,350. And so we have a distribution count that's become larger, and in fact has been validated by this immense volatility that just came out of this sort of uptrending condition in the Nasdaq Composite. And then boom, here comes this very big wave of distribution, of declining prices, liquidation on volume that leads us to believe that we have a bigger distributional process on our hands. And then also just notice this, that going back to the February 2018 decline, look at this beautiful point and figure count that was generated here as the volatility dried up, which was accumulation and took us up to 7950, 8300, right into the area of the highs. Beautiful count. And now we have these new counts which say we're going to trade down for a while. So so I want you to keep in mind the 7350, 71 and a quarter area, 6800, 6350. And then let's go into a vertical chart of this area. So the yellow area here on the left is that count that counts up to the highs. And then we have this distribution count, which this is the larger count in pink. And this count took us down to this 6,800, 6,350 area. But remember, 7,350 here down to 7,125. Well, look at where our redistribution occurs. This area, this light blue box, is in fact a classic redistribution. And this is going to be really important because we can see that after the initial drop, which takes us out of the trend channel, you have, again, additional volatility, which goes down. We have a new downtrending channel, and the volatility remains quite high during the redistribution, which is important. And then notice the last rally up. This rally up is very small. It goes only up to this moving average, and 20 period moving average, touches it, and then collapses down into the next leg down of the markdown period. And so we want to take a point and figure count of this area and see where this takes us. We know the larger count that we took went 6,800, 6,350, and we've marked that on the chart here. We'll look, in fact, this decline that occurred afterwards, look, we're into the area of that right now. But here is a point and figure chart of the area of the redistribution, which we've labeled here. And you can see this by going to this blog post, and you can identify a count which matches, look at this, matches the original distribution count. And so what we have is a confirming redistribution count, which confirms the larger distribution count, which gives us added confidence in the quality and the value of this count structure. And they confirm each other in their separate counts. And so, in fact, this count went 2 boxes below the low of the objective that was created here, and then turned right back up. And in fact, this is the low that ended the decline. Both these counts were fulfilled, they confirmed, and the market went slightly through those lows, turned back up, and then the rally that became the 2019 first quarter super rally followed. And so these point and figure charts did a wonderful job of pointing the way for us. So there's an initial importance of redistribution. Redistribution gives us a way to know how far the market could go, either in a short-term sense or maybe even in an entire bear market decline. Okay, well, let's change gears here. This is actually a current situation. And well, I'm going to take this chart goes back to 2012, but it's quite a remarkable chart. This area here, this is Silver Miners ETF, SIL. And here you can see a distribution count that goes down. This counts down from this area at around $66 to $72, counts down to $34 to $28. And this is a very sharp decline that freely falls all the way down until it gets into the area of our count. And this, at that time, it stops. The count area is the area where SIL stops declining and has a very important rally, which is a rally in a bear market. And so this very sharp rally is the initiation of a redistribution area. And when we have a very sharp decline like that, we always want to have first in our minds redistribution as our essential structure that we're looking for. And notice this, that this high is the highest high in this redistribution area, and then each high that follows is to a lower level. And so finally we have one attempt to go back up, a lot of volatility in this range. It turns down and collapses right out of the redistribution area. Well, we can keep these counts all the way through, just keep making them bigger and bigger. We always count from right to left, but you can see here that this count goes down to the $21 area to the $15 area. And so that is our range. It's kind of a large range, but you know, this is a big decline. It's going from the area of around $41 and it's counting to 21 to 15. So this is a major decline. And of course, we want to use our Wyckofian sense about what stops declining markets, which is climaxes, et cetera, and accumulation areas, to really help hone in on where the market is stopping. But look at this. It goes down, it gets into the area of the range of the count, and then it starts to consolidate with one final attempt, which is a spring or a shakeout of very sharp decline down to 1450, which goes right to the bottom of the range, finds congestion in this range, and then shakes out the lows, turns up, and has a huge change of character. And the reason I'm showing you this is because distribution, redistribution points the way and gives us an idea of how far it can continue to fall. Then it gives us an accumulation count when this rally goes back in. This count takes us up to the area of $47 to $43. Now, notice that we saw SIL go right up to this area and climax just above the top of the range, builds another count, which is a distribution or potential redistribution count, because remember, we're still technically in a downtrend, and it counts down, but only counts to the area of 30 to 25. And notice what it does. It goes down, touches initially the first objective, and then it rallies pretty hard, and then fades away all the way down, goes through the lower objective, and now it's turning back up into this area. This looks remarkably, this last climactic decline looks remarkably like the decline that came at the end of 2015, which turned up. And so now we'll see whether or not this can turn up and start to have a more important advance. Now, I put it sort of a pie in the sky count here, which I won't take seriously until a number of things happen. But the important thing is that we do have additional count. And here, I've taken this count over further to cover this whole area of this last congestion zone, and it takes us to 61 to 69. So there is fuel in the tank for higher prices. So this is how we can use point and figure to help guide our thinking about how far and in what direction the market is likely to go. And so this is a companion piece. This is an old historic chart that I've been keeping for years. But the point I want to make with this is simply that you can see that there is, here's distribution at the highs, which goes down to from the area of $49, it counts all the way down to $16, which is a substantial distribution area. And then look at the redistributions on the way down, and notice how each one of these counts confirms pretty much the prior one. The only outlier, which misses by 2 boxes only, is this one here. And so you can see that we have a serious amount of congestion in the area of these 3 counts, and almost caught this one. And so now it'll be interesting to see whether a more important advance could occur. I think because we're so close to the lows here, we may actually need a potential spring type action and then the ability to turn up, but we'll see. But I just find this chart to be fascinating. Okay, so we have here a chart of ARM holdings, and this is a semiconductor, and this is just a classic redistribution. And you can see that after an initial decline, this is going back to 2000, you can see that there's a climax, a selling climax, and then an attempt to rally. And this rally is a pretty good rally after a sharp decline that goes from 42.5 down to 20. It's a very, very sharp decline. So there's an attempt to rally, and for some number of months, about 6 months, this market is range bound. So we can see that in this rally, there's evidence of climactic action, which sets up the resistance area, and then an attempt to go down, which is a form of support here, and then an upthrust type action, which goes above the buying climax, but can't hold it and comes back in. Well, notice what happens in this redistribution area is look at how we have a series of lower highs all the way through here, which is a sign of weakness. So you have the inability to be able to get back up to the resistance area. Now we have a last point of supply. We have a big sign of weakness decline that goes through the support area and then attempts to rally, but it's a rally that doesn't last long and cannot get back above the prior support area, which is now resistance, and then look at the poor rally that we have here. This is a huge clue, and you'll see this often in redistribution charts. We actually saw it with the Nasdaq earlier, is that there's an attempt to rally. It's a very poor rally, low volume, tight range, a lot of overlap in the ranges, and then just an outright failure. This is often a good place for short sellers to put on a position. And so you can see that after the support is broken, it moves easily downward. Okay, so we're going to change directions a little bit. We're going to continue to look at the redistribution phenomenon, but I'm going to show you a historical case study of Cisco. And so Cisco had a tremendous downtrend after the bull market peak of 2000, and Cisco had gone up to the area of $72. It had an initial break and then formed a redistribution. And you're going to see here, this is a weekly chart that goes from early 2000 to October of 2001, which is just this persistent decline in the stock price. Well, we're going to look at 4 redistributions. We may run out of time and not be able to look at all of them, but I want you to note this case study, November 14th, 2015. Go back, these charts are all in there and you can look at these and study them. So initially you can see that after this break from $72, there's a selling climax and then there's an attempt to rally. And so here we can see redistribution forming. And one of the things I want to emphasize here, look at the volatility, the sheer volatility after this upthrust at the final high. Well, notice the volatility in Cisco in this redistribution area. There's volatility of a sort after this preliminary supply. Then at the buying climax, there's where you can see tremendous volume, and that is the reason I call it the climax, is a sharp decline which goes through the support area. This decline is more severe than the prior one. Then there's an attempt to rally. Well, look how long it takes to get from the sign of weakness up to the last point of supply. And it makes a lower high here, has a little climactic surge at the end, fails again, and notice that this decline is more severe than this decline and this decline. So, and remember what we said about what happens at the end. You have a last point of supply, very low quality, very poor rally, a lot of overlap. Generally, the volume is not that good, and then look what happens. It fails the support area, and then it consolidates again, and then starts to go down and become quite volatile. Okay, we're going to zip through these quickly, but you can see all the elements there in redistribution number 1. Redistribution number 2, one thing that's interesting about this is that after the decline, now look, we're in the area of the high 40s after being at $72, is that notice that the decline really has very little bounce in it, and each one of these peaks is lower. So there's a last point of support of supply rally off of a sign of weakness, which shows that there's a supply present. The volatility grows greater with each decline in the structure. And you can see that after this last point of supply, look at the volatility come in and it just breaks down. So the key here is that there's no bounce here. It's just, it declines, it pauses, starts declining again. Redistribution happens quickly, and it's sudden and it's surprising. It surprises people with how quickly it changes its character from just mildly just sort of bouncing along to all of a sudden violently dropping again. Okay, and redistribution number 3, same kind of thing. Breaks down, has really very little bounce in it. You can see an attempt to rally, but the LPSY is a labored rally, which shows that takes a lot of work to get back up to the resistance area and moves easily back down to support with volume, and then look at the attempt to rally here, just like before. Very poor, sort of hangs out, and then it just gaps down and begins another downtrend. So very persistent decline. And then finally, we have one more. This is encouraging because this is a pretty good rally. Now, look, this is a $21 stock now at the high after being at 72. So then it shows a lot of weakness off this buying climax and goes into a trading range, attempts to rally, takes a long time to get into a last point of supply. But this is a little more bullish of a situation, but it still results in an important decline. And look at the sign of weakness. After the sign of weakness, there's a very poor attempt to rally, and you could still short the stock if you're a short seller in a downtrend off of this poor rally into an LPSY. And so we can see there that there's a sharp decline after that. I just want to show you these point and figure charts. These are the first three redistributions. Look at how they all nest in the same area, which is the area of support, which takes a very long time to form, by the way. But this is a wonderful job of showing how redistribution can just keep going and going, and that these point and figure counts can point to where it wants to go. Shifting gears, at the end here, I want to go back to last week's discussion with Andrew Cardwell. I wanted to give Andrew all the time that he could use to be able to talk about RSI in the current market situation. And we didn't really leave enough time at the end for how StockCharts subscribers and users that prefer StockCharts would want to be able to draw these RSIs. So this will only take a minute. I want to show you how, here are the parameters that he showed in his February power charting discussion, and I put these on this chart. And so I would just screen capture this, and then you can see here that on the RSI, we have the two moving averages, which is the EMA 45 and the simple moving average 9. And then we also want to put the range rules. So it looks a little messy, so you can clean this up as it works best for you. But we want to be able to have the range rules. Normal range is 70 to 30. You can see that here. Here's 30, here's 70. We color coded these so that you could tell them apart. Bull range is 40 to 80. So here's 40, and then here's 80. And the bear range is 60 to 20. So here's 20, and here's 60 in pink. And so these you can paint on the chart as you see fit, and you can see here that in the downtrend, you can see how it stays in the lower range area, and then as it goes into a robust uptrend, you can see how it starts to work its way into the higher bull range area. And I want you just to see how you can set up your chart to work in this manner. So just capture this, and you'll be able to see the way that you can pull all this together on your own charts as you see fit. And you can see here that you can pick the colors that you want. So we have the 80 and the 20 or the 80-40 is blue, the 20-60 is in pink, and then etc. And so set this up the way that you see fit, and it'll look great, and it'll work just right for you. And and with that, we are done. So thank you for attending, and we will see you next time. And I always appreciate your coming and watching these videos. Let me know what you think and the things that you would like to see in the future. Take care, everybody.